Bitcoin move fast. Here's what's happening today. Let's get you up to date. All right, we need to talk about it. Bitcoin is down 25% from its January's peak of $109,000. Right now it's hovering around $83,000 and the panic is real. New investors are feeling the heat, wondering if they got in at the top. But here's what the headlines aren't telling you. This isn't just Bitcoin's being volatile. This is part of a much bigger game. A game where insiders make their moves while retail investors got shaken out. And if you don't understand how the games is played, you're the ones getting played. Now let's start with the obvious. Why Bitcoin is dropping? Some will say it's because of the market's manipulation, interest rates, and government's policy. Others will point to well securing their positions before the next major move in this bull run. But there's a bigger force at play here. And if you look at what's happening across global markets, the patterns is clear. Right now, the S&P 500 just hit a 4 years low. Recession fears are creeping back in. And the US economy is flashing all kinds of warning signs. There's one asset that either goes to make people a fortune or wipe them out depending on how they play it. And that's Bitcoin. And consider this, Bitcoin was the best performing assets of 2024. It didn't just beat the stock market, it's outperformed everything. And over the last decade, Bitcoin average annual return has been around 50%, or outpacing traditional investment. And now it's officially being included in strategic reserves. No more speculation. This is happening. But while that's happening, distractions are being thrown at retail investors left and right. Look at this. Libra co-creator Hayden Davey just launched another meme coin, and it's collapsed 99% overnight. That play, he pumped it using rumor that Jordan Belfort, the Wolf of Wall Street, was launching a token. But 82% of that supplies was controlled by the insider before the dump. Same game, different pieces. Retailers get hype, jump in, and gets left holding the bag. And while that's happening, a new narrative is being pushed. Bitcoins will be replaced. Uber angel investor Jason Calacanis just sparked a massive debate, claiming Bitcoin's time is up. His word, the timing is right to build a better Bitcoin. Restarting the game. Restarting the game? Who do you think benefits from this? Do you know that Bitcoin critics have been saying this for over a decade? Yet, Bitcoins keep dominating. And guess what? Institutions are still buying. Whales are still accumulating. The big players are not exiting. And that brings us to something even bigger, the rise of strategic Bitcoin reserves. Think about this. Governments stockpile everything from oil to food to medical supplies for emergencies. But with inflation destroying traditional reserves, the most Bitcoin-friendly U.S. administration in history is making moves that could change the game forever. Eliminating capital gains tax on Bitcoin, establishing a national Bitcoin reserves. If this happens, it changes everything. We already have strategic reserves for just about everything: oils, food, pharmaceuticals, defense materials. Why? Because in a crisis, prices skyrocket and nations need a backup plan. But here's the thing. Fiat currency reserves lose values over time. If you have $1 in 1913, it had the same purchasing powers as $100 today. That's a 99% loss in value over the last century. Meanwhile, Bitcoin has gone in the opposite direction, appreciating in value while fiat's collapse. And the US isn't the only one paying attention. Reports suggest China may be preparing to accumulate Bitcoins too, aiming to reduce reliance on the US dollar. If that happens, other nations will follow, setting off a global shift in monetary policy. And meanwhile, Bitcoin ETFs are absorbing significant amounts of supply. BlackRock alone has over $40 billion in Bitcoin's holdings. Now combine that with MicroStrategy. Institutional investors now control nearly 1 million Bitcoin, while only 450 new Bitcoins are mined per day. Think about that for a second. There isn't enough Bitcoins for everyone who wants it. And here, the kicker. Why retail investors are panicking, insiders are making moves. And just recently, an anonymous trader placed a $200 million bet on Bitcoins and Ethereum using 50x leverage right before a major policy announcement. The bets turned into $6.8 million in profit. This is how the game is played. Insiders always position themselves ahead of the news, shake out retail, and take advantage of volatilities while everyday investors are left guessing. But here's what you need to understand. Bitcoin has never been about short-term hype. Every correction in Bitcoin follows the same pattern. New investor panic. They sell at a loss. Well step in and buys the dip. Bitcoin's rebounds, and the people who sold rebuy at higher prices. And that numbers proves it. Bitcoin's on-chain data show that long-term holders are still accumulating. Bitcoin doesn't care about emotions. It doesn't care about headlines. It just keeps running on the most secure financial network in history. So now the real question is, are you here for the long game? Or are you going to let the same people who shook out investors at $30,000, $60,000, and now $83,000 scare you out before the next major run? The choice is yours, my friend, and I'm holding tight and stack it right. Take care.